Today, the Bank of Japan governor said the country's financial system is stable and capital markets have been improving. To discuss how the latest deflation techniques are affecting the economy, I'm joined down the line by Tim Condon, Chief Asia Analyst at ING Financial Markets. Tim, thank you for joining me. From the economic indicators, what do you expect to see from Japan's inflation?
I expect that we'll see CPI inflation very gradually begin to accelerate, and the authorities at the Bank of Japan have set that 2% target for 2 years from now. Their so-called 2-2-2 program, 2% inflation over 2 years by doubling the monetary base. I think it will work. I don't think it will work quickly, but I think over the next couple of years, if we don't get to hit their precise target of 2% by the end of 2014, depending on how far away we are, they can easily scale the program up and continue.
Will Kuroda's comments today comfort investors?
I think investors are quite comfortable. Were quite comfortable before he made them, and I think nothing that he said would discomfort them. The Bank of Japan policy has become very almost boring at this point. The meetings there's no changes in policy at the meetings. They're very undramatic, a bit like those of the Federal Reserve at this point. They're not packed with the drama that they used to have. That's because policy is very predictable. They've identified what they're going to do, and they've identified when they're going to stop and change policy, and we're ways in both countries from those economic conditions that will lead the authorities to stop doing what they're doing, and so policy meetings are very predictable. That's the thing that investors like the most: predictability. What they cannot stand is uncertainty, and that's one of the things that makes these monetary policies so good.
Is domestic or external demand helping to support Japan at this time?
Nothing. The economy is very weak. It's contracted for most of the last quarters. So what needs to happen in Japan is that this policy would persuade people to spend money. That's the manifest objective of it, and as I said earlier, I think it will work. It hasn't worked yet, and given the outlook for the global economy, there's a weakness in the Eurozone. Asia's doing okay, but it's not big enough to support the global economy. The U.S. is doing okay, but again, it's a far cry from where it was before the global financial crisis, growth-wise. Therefore, Japan is really going to have to rely on Japanese spending to pull it out of this, and they have put in place the right monetary policy for bringing that about.
Ahead of the G20 meeting this week, the US Treasury is saying it will press Japan to refrain from competitive devaluation. Is the country under pressure, and what do you expect to hear from the meeting?
Not at all. I think that the pressure from the U.S. I don't see the pressure from the U.S. The U.S. Treasury just released its so-called currency manipulators report. It did speak or single out Japan among 4 other Asian economies for special treatment, but it did not criticize. It wasn't critical of the so-called 2-2-2 unconventional monetary easing program, and it wished it well in terms of its aim of stimulating domestic spending growth in Japan. So I think that the authorities at the Bank of Japan have framed this policy as one aimed at stimulating domestic spending. That's an objective that's very hard for the G20 to disagree with, and in fact they'll endorse it. I think, and they'll reiterate that countries cannot manipulate exchange rates to bring about a competitive advantage against their trading partners, but that's not what Japan is doing. Japan is trying to stimulate domestic spending, and the currency depreciation is a byproduct of that policy, and the G20 is just going to accept that.
We saw the yen react violently after the promise to inject $1.4 trillion into the economy in less than 2 years. What do you expect we will see from the currency in the next few months?
I think it will continue to depreciate until expectations about where spending growth is going to settle. Keep in mind, Japanese spending has not grown really in the last certainly in the last decade, and in other words, the level of GDP is no different than where it was a decade ago in current yen terms. Until and this policy that the authorities have put in place at the Bank of Japan, it aims at changing that, aims at producing some positive spending growth. We don't know what that positive number is, and the yen is going to depreciate as long as people think that we're still getting to that number. I don't know. Perhaps it will stabilize around 2%, and when that's the consensus view among when that 2% number emerges as a consensus view, the yen will stop depreciating. My baseline scenario is that the yen is going to be at a 115 within about a year, 115 to the US dollar.
That was Tim Condon there from ING Financial Markets with an update on Japanese currency devaluation. Make sure you keep clicked to Dukascopy TV for all the latest financial news and updates. Take care.